Okay, we're going to go ahead and get started. Hope everyone had a happy Easter, having a good Easter. And let's move into our charts. So over the weekend, right, a lot has happened. We know earlier, on Saturday, we had the pilots shot down and rescued. And then we also see the post today by Trump that's really here. Let's go to that. Says Tuesday will be power plant day, bridge day, all wrapped up in one. And then he kind of ends it with a sarcastic, jab at Islam. That's the way I would have interpreted it. Some people would say, oh, no, he's just joking. Of course we know. Haha, LOL. I don't think so. I think if you're Muslim and you're more radicalized, that's definitely not going to make you want to negotiate. So it seems like he's sabotaging his own negotiation strategy. So that's why it makes you wonder if he really even wants uh, a deal in the end. Because every time he goes, there may be progress, then he kind of shoots himself in the foot with this type of thing. So if there was a deal close, I think sending something like that, now they cannot make a deal, right? Because they can't be seen given into that kind of kind of threat and then slanderous, comment to their religion. So it's not going to happen. So again, is it being done to manipulate the markets? We don't know. Most people think that's what he's trying to do, taco pump the markets. But you have to remember, he may not want the markets higher either if he's playing the end game scenario I've talked about in my videos on YouTube, and you can watch that video on YouTube. Because in the end game, U.S. has a much stronger position on the playing field, on the board, than we may now, right? Seems like Iran has an equal position or even more of a strategic advantage, but that can easily change. And Trump can get you right to the end game by blowing up everything. And that may be his strategy after all. And of course, the globalist Wall Street bankers will absolutely hate that. And make no mistake, he may like the markets, but he hates the bankers. He hates the central bank. He hates what Powell is doing. Not a fan of these guys. So, so it's very strange times to try to read the tea leaves and figure out where market's going to head based on news. But it's clearly driving market sentiment, right? It's clearly driving market sentiment right now. And so it keeps going. So that's the geopolitical, right? And so 48 hours, and it was, maybe 24 hours, and it gets moving, and the deadline moves and goes back and forth. And so you can't rely on the news for any of your trading strategy. Okay. Yes, it may create volatility on the shorter time frames. Our channel doesn't trade the 5-minute chart, the 1-minute chart, so we don't need to worry about that. But if you do, then yeah, those headlines do matter, and you have to kind of think about that in your strategy. Now, the thing the market needs to deal with, the reality is the oil and energy situation. That's the problem the market has, is oil prices keep pushing higher. This is causing real damage to a lot of companies right now, real damage to consumer spending. It just hasn't, come out yet. In the news hasn't been communicated in a way that has caused panic, but it will. It's eventually coming. So this crisis, and this is what I've been telling my elite members, and I posted on our weekend update. It's a 5-phase crisis. And it's very simple, very logical. The first phase is the initial shock of the situation, right? We kind of already gone through that, right? The initial shock, oil spikes higher, the markets were trying to pump, Remember back here, we had so many people talking about 720, and this is the initial shot, the initial shot, and that wasn't going to happen. Okay. No 720, all those, because everything changed overnight. Black swan emerged. So now we go to phase two, and we're in phase two is price transmission. And this is where the inflationary dynamic is now cascading throughout the marketplace, where you're going to see it in fertilizer and in specialty gases, and companies' balance sheets are going to start to have to, figure this out. Products may be starting to be missing. Consumers now have to face higher prices. So the market is transmitting the price increases right now. And it doesn't have a lot of effect at first because most people think it's transitory. So they may pay the higher price. They may, just accept it and not change their behaviors. And then companies may not change their prices. They may take it, so things are okay. And that's why the markets can really stage this kind of relief rally in sideways action I'm showing here. Because in price transmission, right, you're not really seeing a lot of immediate impacts. That comes later, but the infection is spreading throughout the patient, right? You may have got, just a cold right now and you sniff, but now your body is going to start getting a fever, right? And now you're going to start to break down. So it's going to take time. So companies and stocks kind of just continue on their merry way. But of course, there's beneficiaries of price transmission. We've already seen that energy sector, right? And recently the miners and copper starting to come back. And that is allowed the market to now go sideways to maybe even higher. But at some point in the future, and we don't know when, we're going to hit margin compression phase. That is when the reality is, I guess, comes to the, light where fundamental investors see that this is having a permanent effect. And that means you're going to see companies putting out earnings warnings. They're going to miss their targets, guiding lower. Q1 misses. Remember, this happened in Q1. They're going to miss estimates. Remember, everyone makes their estimates. Well, now they're going to miss their estimate. And that's going to shock the fundamental investor community because right now they're complacent. This is transitory. They're buying the dip. That's why we're not dropping further because no one is come out yet. No big company, no semiconductor. Nobody has said, I ran out of helium. I got to close my plant. But once that happens, right, and you get that margin compression, earnings drops off a cliff because you can't manufacture, whatever the reason, or you run out, you can't fly jets anymore because there's no more fuel. That's when the next lower starts. And that can happen at any moment. And of course, if oil goes higher, that only brings that phase in sooner. So if oil stays where we are now, perhaps price transmission takes more time, and it takes more time to go into margin compression. But if Trump wants to go scorched earth and oil goes higher, well, then we'll go into margin compression quite quickly because companies will have to communicate to their investors the consequences of what's happening. And some may be, irrecoverable because they may go bankrupt because they're that tight with their finances, their capital structure. They may not be able to make payroll. So you're talking furloughs, that type of thing. That's going to create massive panic, way more than we've ever seen. Because we've never seen something like this since Lehman collapsed, right? So you're going to get this margin compression. And then you're like, oh, okay, everything should be okay, right? Because in margin compression, energy prices may still continue to go higher because the demand's inelastic, right? And then that means people are going to still need to buy oil, governments. So there's still going to be demand. Rich people will still buy whatever they need and they'll go. So there'll still be an underlying bid, but at some point, energy will get too high. And then when you'll hit demand destruction. Demand destruction comes. And then that's when everything goes down and crashes. And then COVID 2020. That means oil will crash, energy will crash, gold and silver. Only thing you can go into will be cash. and short-term treasuries. There'll be nothing else, or short the market. There'll be no other place to hide. And once demand destruction is over and the dust settles, then policy response will come in, and the markets will stabilize, and that will be that. And then we'll go into a new bull market, but it won't be a bull market like you remembered, where it go back into all the big cap tech. Yes, some big cap tech will do okay probably, but not all of them. It will be a bull market of builders. And again, I've given my elite members the roadmap, the playbook, how to rotate into what's when we do bottom at some point when we go through all these phases. So you see, the phase of this bear market is going to need to take some time, but the time may be a lot faster than what people expect, because typically an inflationary bear market goes through like longer phases. These phases happen, but they take time. They take years to develop each, and think of the 1970s, that type of cycle, the sideways bear market in 2000, ending with the demand collapse in 2007 and 8, right? That was phase 4, 3, and 4 right there. So, and price transmission was in the middle area between 2002 and 2007 peak. So usually this process is years and takes time, but this may happen a lot faster. And that's why it may go through the same rotation process, but in a speed of a 1929 or 2008 and 9 cycle. So that means the moves are going to be violent like you're seeing here, and we could still even go higher. And you're going to see this all the way down. You're going to see this kind of violent rotation until you get to the final phases, then when everything collapses. So that's kind of where the market is at this point in this situation. And a lot of people are hoping that, I know, oil will just go back down and everything will go back to the way it was, the status quo. People are desperate to return to the status quo, right? Globalists, central bankers, most, I would say Wall Street, they want to go back to the way it was. Globalization, everybody plays nice, but those days are over. And in fact, this situation is not going to go back to the way it was. It can't go back. And Iran is telling Trump that there is no going back. There is no redo. They're not going to just open up the Strait of Hormuz. They realize they have a huge leverage there now, and they've been able to exploit it. Why would they give it up? So they're going to own that forever, even if Trump goes and goes back, and they're going to always charge a toll there for the rest, for the years to come, and they're going to use that to rebuild their country. And so there's going to be a new cost premium in energy that didn't exist a month ago, and that will be with us forever. And also geopolitical risk. That's if everything just kind of diffuses, because you have to be really stupid to think Iran will just go, okay, you can, we'll go back and we'll take a couple billion from Kushner and then these guys, and you can just use it and we're cool. No, they're going to leverage that thing. They're going to leverage, they'll never give it up. So, and again, if Trump wants to go take it, he's not going to be able to take it because it's essentially a kill box. But let's say he even is successful and takes it, you have to hold it, which would be a nightmare. And ships aren't going to go through an active war zone. It'll never happen. It'll be like being in Fallujah, and it will never end. It'll just be a constant bar. What ship's captain is going to sail through that shit? No one. So you're really like smoking crack if you think you can just occupy that area and everything's going to be cool. You'd have to take over most of that landmass around it, and you don't have enough troops to do that. So you can even take the island, but you can't hold it. And even if you do, it's going to be a war zone, and you just can't. And then you have China, and they're not going to allow you to control global trade and global energy and their energy. So they're likely to go take Taiwan in response to that, or just confront the United States directly, for all we know. So this is never going to happen. So all of those scenarios will never happen. So the only scenario I can see is Trump tries to declare a victory and then leaves. And then you have a new normal. And the new normal will be Iran charging a toll and certain vessels going through and certain ones not. You pay the bribe, you don't pay the bribe, whatever it is. And then that's a new bid in oil. And that's why energy prices are going to be higher than they will. And we're in a new era. And that's what our charts show. Energy is not going to go back to the way it was right? Until you get to this demand destruction phase, right? So again, if U.S. retreats, price transmission will be in phase two much longer than we think, right? So if Trump can accelerate the crisis, then he's going to accelerate the phases I just went through. If he diffuses, delays, kicks the can, then I believe the crisis can drag on for a while. Phase two drags on, and then, slowly so it slows things down. But eventually you get to the same point, right? And then in the dust, when the dust settles, and then, of course, like I said, everything goes down, demand destruction, and then a new normal, but Iran will still own that oil no matter what, even in the new normal. So that's what I'm trying to say, guys. So the world's changed. You got to get your head out of the sand if you don't believe otherwise. All right. So now we can go to the markets. We are expecting a sideways action right now is the most likely path. The most likely path is a series of 4s and 5s in the NASDAQ followed by another pump. This is a reset of the weekly cycle that will occur, and then we move down lower. So this chart implies Trump will taco, kick the can, delay. And remember, though, delay favors Iran in the end. Time favors them because it allows price transmission to infect and the host, the patient, and get, past to the point where they die, right? So delay, the status quo works for Iran because, again, you can look at the Hormuz live tracker, and we've only seen about 5 ships moving through. And you may see on the internet, oh, I thought I saw 10 and 11. Well, guys, you need to go back to those accounts and where they're getting their data. There's a lot of bad information out there. Well, and some of those accounts are just lies to pump the futures. They're from financial accounts, hedge funds, and things like that. So you need to be really careful. So go to the sources. You can go to these live trackers that have the data and see for yourself. Nothing's changed. Yeah, there may be some ships going around a circle. You've seen that graph where the ship goes around in a circle. Those things are useless. That information is not going to be helpful. And a lot of it actually, if you look at the date of those videos, they're like a week ago too. They're not even like real time. So again, people are being fooled by social media posts. You need to really be careful what you're reading and don't make your trading decisions on stupid posts like that. So that's what we're seeing. So really nothing's changed. Okay, so we expect this. This expects tacos and escalate, de-escalate, and then something bad happens. Here, my guess is this is when companies start to report earnings and they can't hide the issue, and then fundamental investors freak out and they realize their earnings estimates for the year got to come down. They have to cut guidance, they have to downgrade companies and all that fun stuff. And that takes time to do that. That's what probably this wave is here, right? That's probably what starts that wave. And in the meantime, oil just creeps higher and higher, as we show here, right? Kind of sideways and higher. And then it starts to just kind of creep higher and higher, right? And eventually, right, you're going through margin compression and you're going to and this is going to be more pain. Who's buying oil here? The rich, the governments. And then at some point, then there's just too much, there's demand collapse. You just can't run anything anymore. And then like COVID, it just all collapses. And then this corrects, right? Then this whole move ends in 5 waves, which is where we have this box here. And then you have a big correction, right? But remember, it's not COVID. It won't go negative, but it will correct. I don't know where the right level would be. Yeah, we can look at that later, but it will essentially crash. And then that will be the new normal. And then you would build off of that. And I already explained why the new normal will be higher because Iran will continue to control that straight for the foreseeable future. Because there's no way that cannot be taken out of their hands unless the U.S. wants to send hundreds of thousands of troops willing to sustain massive casualties and be able to occupy not just the islands, the lands around it, and to be able to also diffuse any other drone area, other underground system. It's just not possible. It's just not possible. So that's all I can say, guys. So that's where we are with the market right now. And for the short term, there is also possibility. I was telling members that we could take out this peak here. I guess this was Wednesday's peak. And then it becomes a different structure. and this becomes like a big B wave, right? Because you only have 3 waves down, and then you get some kind of big connector wave, right? And that can get you back, even back up to all-time highs. That would be a massive pump, but it would be a C wave. It could be a run-in flat in here, just needs 3 waves, and then it would go lower. So it's really tough if you're a day trader on how to navigate this. And this is why you have to be a good trader, not just know the market's going to go lower, because a lot of people, didn't really take a lot of profit here if you were bearish, and then they're going to chase up here. They may get blown up in the next couple days with that wave, and so it's hard to trade this unless you're taking profits and you're taking the money and then setting stops, moving your stop. You got to be an active participant in this market. If you're a passive trader, there's no way unless you get, you're playing a longer term strategy, right? And just like what the institutions are doing, like they're just essentially shorting up here, right? They're just basically looking at the market. And this is probably what most pros would do right now, is not worry about the day-to-day swings here. Just look at, if I just drew a box right here, just like that, basically just shorted in this box and played a long game. Right. And every time the market comes back up here into this liquidity pool, you just short and you just add to it. And then when it drops, take some profit. Oh, it comes back. All right. Put it back on. And because eventually it will run out of energy. Right. And then it will go lower. And that's probably the best strategy to play. And that's how I would do it. And then the long plays is more just scalp type trading, and the shorts is more longer term. So you have to have 2 different time frames. So if you're trading these calls and puts, right, you got to be shorter time frame with your calls, longer time frame with your puts, and you got to be smart about it. But that's options. But I always use the common stock, so I don't have to worry about that. So, but anyway, guys, that's where we are. That's where the market is. So very dangerous setup for the market. And from a technical basis, we know the market's probably going lower because the AI has not corrected. We know it's getting infected with this crisis. We know helium's disappearing. We know Korea's being impacted. We know Asia in general is slowing down with these issues. So it's only a matter of time. Your favorite semiconductor company is going to come out and go, we got to shut the plant down or scale back production. And once that happens, the market's going to go freaking crazy. And that will be the end. So just know that. That's how it's going to probably go down. We don't know which one it's going to be, but it'll be one of them. And then that will be that. Welcome to margin compression phase. So that's kind of where I see things. So that's why I see things anyway. So guys, all right. So I'll go through your questions now. So let's see, I'm just going to read through some of the comments that have come in. I'm looking at 4-star me, back to membership, FDT. First off, this guy needs out. Secondly, I'm not sure your comments about this guy needs out. I'm not sure who's that. You mean Trump needs out, but okay. This is why I'm back. You're smoking crack. Yeah, smoking crack. Yeah. So anyway, I missed where we are with the indices. We're expecting one more higher in a flat. So plain Lance, I've missed where you were at. But the indices, are we still expecting one more high? Are we in the flat you predicted last year? We're still in the flat, obviously. Here, depends on the indice where you are. I think this is a flat. See that? And can you get one more high? You can if you play around with the B wave, right? That's the problem with because you only made 3 waves down here. You didn't make a 5, so the flat is still in play, but a bigger B wave. And it's like, oh damn, those market makers, man, they just aren't letting anyone win, and that's why you have to be really smart about how you trade this market. And again, if people were shorting down here because it felt safe to short, you deserve to get blown up. And I've been telling you guys not to do that, but that's what most average traders do. They're like, oh, we're breaking down, let's short down here. And it's nice and safe and comfortable. And what do? The market makers and everything, they just rip you back up. So guys, short up here. You see this pink box? This is where you short. Okay. You do not short in the hole. Okay. If you short it down here, you're going to learn a lesson and learn from the lesson because it can keep going just like this. Okay. You can do it. You can do it. Okay. That's a problem. So we don't know. But believe me, if it doesn't, what a gift. Thank the market makers for giving you another opportunity to go short. If you miss this move, that's what I would say. I mean, if this happens, guys, I mean, good God. I mean, it's like, great. Thank you. I mean, I'll take it. Because if they think they're blowing like people like me up, I'm laughing because, of course, I shorted here. I've taken half profits. I'm in a zero risk position. I would care less. You want to rip it up? Fine. I'm just going to add more because that's how I trade. But a lot of people aren't doing that. They're shorting down here and they're going to get blown up. So the market maker may do that. That will have to happen tomorrow. Okay, I think. Because if we're not, we'll make 5. And once you make 5, then you can't have that structure. Then the B is in. Now, it doesn't mean you can't retrace, right? You can't retrace back up, but going to new highs would be very unlikely. Very unlikely, okay? But you would have 5 waves down at that point, okay? So that's where the market is. But it evolves. That's why you have to subscribe to me and follow what I'm saying because every day is different. Every day I get new data and we have to modify, right? There is no like, this is the forecast and it stays like this forever. And if you follow people that do that, they're, not intellectually honest and they're overconfidence and they're too, I guess they have hubris and they'll blow up your account eventually. Because the market is constantly changing and you have to be willing to adapt with the market. Elliott wave theory gives you possible paths. There's never one certain path. Again, if you follow someone who says this is the only path and the path, and you better bet, then you better run away and cancel that service because I tell you, there is always a bearish and bullish path. There's always 2 or 3 paths. There's never one path. If there's ever one path, the market would you just make, why is that guy a billionaire then? He should be like a millionaire. Why is he even doing this, sir? You know what I mean? So you gotta ask yourself that. So it's just the people that aren't, they're arrogant, overconfident. And that's an emotional, problem they'll have. That's as a trader, you can't trade like that. So the Elliott wave is changing. So you got to change. And it shows you the possibilities. Right. And you try to narrow it down to the most likely path and then use other techniques to get you your trade ideas, right? Which is Fibonacci levels, chart patterns and everything else. And other people I follow, fundamental and that, like all those input come in and then we make a trading decision, right? That's how we do it. And that's why people can't copy me because everyone's like, oh, I want to know your system because, one guy's like, I think was trying to start his own YouTube channel and copy me. And he's like, you can't copy me. You can't, my brain is in my brain. There is like, I've been doing this for 20 years. I can't train you in 1 hour to do what I did. Like this because I'm taking in so much data, so much information. I'm constantly learning from other traders and what they do wrong and what they do right. And I'm putting that all in this analysis, guys, constantly. Okay. So it's not just pure Elliott wave on this channel. And you all know that, but it helps us talk about the paths. Okay. It talks about the paths. And that's why I use it, right? Because how would I else communicate where we're going, where we've came from, right? It makes no sense, right? So we have to have this common way of communicating, and we do that. But if you just trade on the count, boy, you're going to be in a lot of trouble potentially. You may get it right sometimes, but there's no 100% count. And I also look at it this way from philosophical standpoint. If the count was set, if we knew this is the only count and the count's going to happen, well, then to me, that means people don't have free will. And I believe people have free will because what I mean by that is you can tell me that Trump could wake up any day or Putin and he could say, I want to just screw this, I'm going to just nuke everyone. He has free will. He can do that. And you tell me that's going to change the chart you have, right? In other words, human beings get to make a decision on what they do every day, and they have consequences. And we just go along for the ride. So if you're like, my chart is this is the only chart, then you're basically saying there's no free will. And that means these decisions have already been predetermined, because the market is just a measurement of sentiment. And like, you know what I mean? It's just, and so you can't, so it doesn't make any sense to me, because that's what these Elliott waves represent: sentiment, ways to measure sentiment, and human behavior, right? That's why it's so powerful, right? That's why. And so as long as humans can make their own decisions and they have free will, then I believe there's no set count. There is no set, this is the count, right? Because if there is, and there is only one count and there is no others, and then it's already been decided for us. And then what are we here for? So anyway, that's enough of that. So I'll keep reading through the comments, guys, and then I'll get to your question, your super chats. Again, so then over time, the Gulf countries establish new pipelines to other ports that bypass the Strait of Hormuz. They'll just get blown up again. So what do you think Iran will do? They'll just keep blowing them up. So they'll never be, the area won't be stable, won't have stability to do that. And in fact, there's some people I follow that are very smart in like society and things like that. And they think in the new normal, the GCC countries may not exist the way we are, because if America leaves, they don't have America's protection anymore, right? So America, therefore, would have to be in the Middle East. Therefore, the war would continue, and therefore they wouldn't be able to even start to build a pipeline. So if America leaves, they're going to be on their own. So who's going to protect them? Israel? You think Israel's going to? No, maybe Israel would do that, and maybe they would do what you just said, but that would be a whole different, right? That's a whole different animal. And that's where you get into this whole Pax Judaica, Judaica. It's like, I don't, and again, these are radical ideas and things, theological ideas, but I would say that, to me, I don't think it's likely, because I think it's too likely. Thanks, guys, for the positive notes. Enjoyed my market analysis. And my question was on commodities commodities should continue higher, right? I think the ag commodities rise later. I think natural gas rises later. And I have my own reasons for that. I think all the commodities do. I would be worried about precious metals because one, the charts, with the strong dollar, but also I think there are a lot of the industrial metals tend to sell off in phase 4 and 5. They typically always do. And then finally, when, people are needing liquidity, they sell everything. So there will be precious metals in 4 and 5. Now, off the lows, they may do really well. This, they may recover the fastest. Gold and silver could recover the fastest, but I would still expect them to sell off in phase 4 and 5, because that's what the markets always have done historically. But I would say that leading into it, margin compression, I think they'll be under pressure, because people are going to start going into dollar and protect their capital. At that point, that'll probably be another leg lower in those metals, which is kind of what I'm preparing my members for right now, to start thinking that is possible. All right. And then, yeah, I think that bigger B wave is something that they may want to do. There are some people I follow that expect that seem to do a pretty good job at trading the market. And so we'll see. Nothing's guaranteed. I wouldn't bet the farm on it, but I would definitely, keep your eyes open and just be aware of that. And if it does, again, then just look at it from an opportunity. Creates a massive opportunity to short the market later. That's how I look at that, guys. How's Tesla doing with high oil prices? Fundamentally, I don't know. I can't tell you that. I know interest rates going higher hurts automakers too, not just energy, but there's probably some combination of those two variables that would make people, look beyond the interest rate problem. But I do think that the chart shows more downside for now. in Tesla. But I will say this, that their claim to fame is going to be robots. And I said this about a year ago with Tesla. I said, if I was the CEO, I would like forget about cars and just go all in on robots, because that's the real transformational opportunity that could take him literally to tens of trillions of dollar market cap. And I believe he hinted at that actually, I think maybe 3 or 4 months ago, and investors freaked the frick out. They like went crazy when he said that. And because he hinted that they may need to focus more on robots and turn their factories that are making cars to make more robots in the future. I think he said something like that. I'll have to find that article. And the fundamental, the CNBC people, they went freaking apeshit crazy when he said that. Like it was like sacrilegious. So I'm not sure, but believe me, I think Tesla is robots. And Elon Musk knows that. Cars is not really the future for Tesla. That got him to where he is now. The future is going to be robots. And if he could perfect it, I think he'll be one of the most valuable companies in the world for a long time, because everyone will need to buy them, just like he said. So dude, that is your 2030, 2040, play, right? That's a stock. But he's got to pull it off. But every time you bet against him, he always wins. So, he always somehow figures it out. So I figure he'll probably figure it out. A lot of people don't think he can pull it off, but I bet he will. So that's my thoughts on Tesla, guys. So yeah, Tesla's on my shopping list, right? Obviously. And their chart shows it should be too, because of the structure of its wave pattern. All right. Took you a couple years. How's Tesla doing? Sage cover wheat, software. I do cover those, and we're long all those commodities. Yep, because we anticipated this, guys. We were long energy stocks in the summer 2025. In the summer, mostly, we got long because we saw the breakouts. And then that this happened. And go figure, there was an IMF report released in the summer talking about energy shocks and transmission. Let me see if I can find that real quick. I'm just going to change my screen and see if I can find that. You guys really need to take a look. And this is conspiracy theory stuff, but I'm going to show you because it's way too spooky. I stumbled into this. Let me pull this file up. Hold on here. I'll come right back to the screen in a minute. I think I bookmarked this. Yeah. Okay. Here we go. I'm going to go ahead and switch back. Okay. So guys, the IMF wrote a paper here, Oil Shocks and Labor Market Developments. And if you look at the date, it's July 18th, 2025. This is exactly when we saw the energy stocks turn higher and break out of the downtrend when this released. To me, this was them telling the elites and the people, get ready for what's coming. And if you actually take the time to read all this shit, 28 pages, it goes through all 5 phases I just went through. It actually, not like how I condensed it into something I can explain in 5 minutes. They write 25, some guy got paid probably $1 million to write this in write what I said in 5 minutes and 25 pages. But it's the same thing. It goes through all the cycles the market will go through. It also talks about the unemployment impact that will come after it. It said there'll be mass unemployment as you get to the phase, the final phase 4, demand destruction. Oh, where do we see that? COVID? It's like COVID. So again, conspiracy, it sounds like this was all planned, right? We also, I heard on Spaces on X, and again, I don't know if it's true or not, but it was on on Spaces, and I forget the guy's name, but it was on one of these news guys. Let me see if I can bring it up here. If it's he's in my feed. Mario, it was on Mario's news feed. It was on Mario's news feed. A guy comes in and he said in the summer in 25, China had renegotiated and started to stockpile energy and started to change their natural gas contracts and things like that unexpectedly. And it kind of alarmed people. I was like, what are they doing? Like, what do they know? So again, I wonder if this was all planned. That's all I'm saying. What we're going through seems random and may not be random. The markets told us this happened in the summer. We saw oil break out well before the war, and I mentioned that to our followers. We saw oil break out of its correction, way before any market participant or stock service saw it. We saw it break out way down here, right? Because we saw the weekly cycle end, right? This is the power of my system, right? And again, sometimes it's so simple. People try to, poo-poo what I do, but look, I just drew a simple line. And as soon as we broke through, I said the weekly cycle is over in oil. The whole thing is corrected. We're at a new cycle higher, right? And you could have market bought oil right there if you wanted to against the low, right? Right. And that's why at first we tried to buy it, I believe, right around here. We were trying to find the setups, but every time we found one, they tried to do these flats and flat. But then eventually, some of our members still stayed long. I know. Then we had this was a good setup here. But my point is the charts, the insiders, the people in the know, they started buying oil sooner, right? So oil was starting to get bid towards Christmas. So somebody knew something. And then the energy producers turned summer 25 with that article. When that article came out, all the energy producers started breaking out of their corrections. And we saw it in our group and we got long. And that's why we're long rig and more and all these other ones. I mean, we were cherry picking. There were too many things to buy. It was so much to buy. It was just like, what do we not buy? So that's where we are, guys, with this. So I went through everyone's comments this time. So I just wanted to do that. I usually never do that. So change it up. All right, now let's go to super chats, guys, and I'll go through the super chats. So starting off QMCO. So QMCO quantum is, if you look at where we are with it, it really only made a 3-wave correction, a corrective move. It's been in a historic bear market, for quite a while, I believe. You can look at the chart. So there's no reason to think it's not going to continue lower. In fact, you see you broke this low already. So I would just continue to expect the trend to go lower. And we've even seen that. We've made 5 waves down. But with the 5 waves down, we actually should see a counter trend rally. Again, perhaps this is a clue that the market's risk appetite may return before the next major leg lower. And we are seeing like the daily cycle turn higher, right? If I can just look, you see it's turning higher, it's opening up. So the daily cycle, but we also are seeing the weekly cycle starting to elbow higher. And just like I just showed you with oil, right? It's turning higher. So I think you're going to get a relief rally. Okay. I think it's going to get a relief rally. But I would expect it to fail. Okay. And then when it fails, it probably goes into the abyss and perhaps it goes bankrupt. Who knows? But I believe it's going to relief rally. STK, this Soul Strategy. This was the last update I did on it. Probably a real shallow connector here, but this is too shallow. So could we see a whipsaw back up? I think it's possible to see that, but we expect more downside. Okay, we expect more downside. We need to erase divergence. So we got to take these lows out. It's slowly doing that. Now, once that happens and we take out these lows, then the correction really can end at any moment. Now we have to go to Solana and look and see how's Solana doing. And Solana hit this resistance area, got rejected. It looks like 5 waves down, but we don't have enough of the structure yet. Now it has an Y. If it's 5 down, we will rally harder, pump more. It would do this, that. If it's not 5 waves, it's something like this, right? And then it's something like this. And we just crash like next week or Monday, you know what I mean? So to me, it needs to go lower, right? And that's always been the forecast. That's still the forecast for crypto in general. But as you can see, most charts in crypto just need one more swing down. Now, does that mean, it's going to go to all-time highs? It doesn't mean that. It means it could have a big relief rally to correct the whole thing, but can always go lower later. We don't know, but we cross that bridge when we get there. So that's what we're looking for. All right. Then next is INJ Crypto. Let's take a look at that. Again, we'll see how up to date that chart is. INJ. All right, let's take a look at what we have going on here. So you see what happened, how you only made 3 waves? You never made a 5. So since there's no 5, it's corrective, right? That's why it failed. So that's why I keep saying, like, when you trade bearish structures, you only get 3 waves. The 5th wave is never a guarantee. So if you don't get the 5th wave, then, there's no reason to think it's going to ever go higher, right? It can just keep melting down. Let's take a look at the overall picture real quick. It's still holding the all-time low. I think that's the most important thing, but I'll check it out one more time. Okay, so you've got 3 waves down. So you have one cycle, another one, and then you had a connector, and even that failed. So you're kind of running out of room. Yeah, so I see what you're saying. Is it even worth? Is it salvageable? I don't know yet. Let's look. We need to look at this bounce and see what it did. So this bounce here, if we look at it, it just looks like it just reset the cycle there. So this Y is done here. So it's in a new leg lower, but as you can see, you've erased divergence. However, you're holding that low, so it's likely to break this low. So it's going to have to thread a needle to stay alive technically, right? And we've seen when these all-time lows break, aka Luna, it can go right to zero. It can go right to zero, literally to zero. So hope is the worst enemy of a trader. At some point, you got to abandon ship, right? I would have probably abandoned ship on this a long time ago, but especially after that low breaking right there. However, if you still want to hold out hope, it's got to finish this move and hold that low. If it can't do that, it's like I said, abandon ship, and that's that. And again, I don't know nothing about these guys, but it's got to have to thread that needle, and maybe it can do it. Maybe it can do it, and I'm hopeful for you. I really am. I really hope it works out. Okay, then ALHC. Yeah, I was looking at that before the live stream. Looks pretty good to me. It had a really tricky structure. I think it's hard to see this here, but I think it's a flat here, A, B, C, because you've got 5 waves down clearly. And then, so you can put 1 here, 1 would be there, be a flat. So from this low, it looks like a 1-2-1-2 setup. I mean, that's what it looks like to me. Now, it has a couple possible paths. So that could be one of the ideas, okay, that I have here. The other one is potentially it's still in 2 and a flat. And this would do something like this, where it comes back up and then makes one more low like that. So it's either one. I think to play it safe, right, you could probably expect the flat, because if you look at this structure, I can force 5 waves, but if it really looks better as 3 waves. And if that's the case, then this would be a flat. So I think, I probably would just expect something like this. And looking at where the market is in general, like you just heard my market speech. So I think you just might as well expect this. But if we take out B, then it would revert back to the 1-2-1-2. Okay. Yeah, you see how we never really took divergence out. So yeah, I think this is probably the more likely path, something like that. Looking at it now. So, but yeah, I think it's pretty bullish overall. I think it will break out of this consolidation. I mean, if I use my imagination, maybe I could think of it like an inverse head and shoulders, and this was like a false breakout, right? Whoops, and then we just kind of crush it back down again, and then you come out. So I don't know. I think that's what I would expect for this. But it seems okay, right? But we really need to break 28. We got to break this level. That will really open up the bull market. The next one is prop. Pre-operating, it looks like, based on our count, we need a little more downside. Again, this is a go to zero, go to the abyss. I think did we break this low? Looks like we broke the low here too. So again, this is, I know like people are hopeful or whatever. Like this to me is a go to zero stock. I mean, it looks pretty clear to me that you've got some kind of three-way to move up. Maybe it could still go a little higher in X, but I wouldn't count on it, right? And then it's going to have a massive meltdown. Okay, I mean, we could just look at this. Almost looks like a descending triangle from that point of view. Like I can look at this in a lot of different ways. So let's look at the 4 hour. It's almost oversold, fully pumped. The daily's fully pumped. The weekly, and the weekly showing divergence on the stochastic. So this is at risk of a reversal at any moment. Abandon ship, right? No reason to hold this instrument that I can see. And maybe I'm wrong though. I can be. All right, YNN. So China, we're looking for more downside. So China, we want to see the Hang Seng hit around 20,000. That would probably make this do a big double correction like I have shown here. And that would put the box here around about 1974, say $20. So that's what we're looking for, something like this. So right now we may be in like a 1-2 count. And then of course the waterfall sell-off. And this aligns with our forecast on the dollar and also the market in general. And the Hang Seng. The Hang Seng is looking like, we have this, perhaps we could whipsaw back up. You see that? So, and then more downside. So that's kind of where I see it. And again, with the Hang Seng also, if we zoom out, there's your wave 4 cluster. The market tends to almost retrace and come back to this cluster. Usually it's, what I've seen, it almost always does that. So that's probably where it's going, which means this is going to go lower. And here's our bounce where this will probably bounce here and then waterfall. All right, lab down is the next one. Or I'm sorry, I skipped over one. VNRX. Let me put that in here. Volition RX Limited. All right, so it looks like it's trying to find a bottom here. Nice little reaction, but then it came back and broke the low. Or I did it looks like it's double bottoming. Yeah, we'll consider that a breach of the low. So this could have been the bottom, but unfortunately it's extending. Now what we need to do is see how strong was this bounce. Very weak bounce. So we're still in 5. All right. So it's still in 5. So you just keep labeling it, right? You just go 1, 2, but obviously it's probably gonna go to the bottom of the box, if not go through it now, right? So if I would have saw a reaction like that and it failed, I wouldn't trade it anymore because because if this was bullish, it would have been supported. You would have squeezed short, so you didn't. So again, I would just not really worry about this, but it does look like it's going to go into now a 3 of 5, which means the selling's going to be pretty intense. So you're likely to come through this box. So I don't even want to draw the box here anymore. I would consider the reaction over, and now it's I wouldn't trade it because it could erase divergence, and then this 3 becomes a 2. Okay, lab down is should be making a 5th wave. I think that's what the XBI is doing right now. So we want to see it finish out. Now it could be like this and done. It could also be a 1-2 and keep extending a little more. But again, you want to see bullish divergence, which, I mean, you're going to look at all that. You're going to see bullish divergence there and there. Like, there's so much bullish divergence. Like, it has no business coming down here. So this is, this is clearly a major cycle wave 5. Okay, it's a major cycle wave 5. So what I see with bearish ETFs is do not try to catch the falling knife on these though. You have to, my always advice is what I tell people with these triple bears, wait till the cycle is over. Don't, because it can keep extending. It can erase divergence. We know that. We see these with these bearish ETFs. I mean, if we zoom out at these, the bearish ETFs, I mean, look at that, right? So the best strategy to play these, and again, our elite members caught all the bearish ETFs months ago because of this strategy. It's not a strategy I use, is you wait and just, let's say it goes down, and one day you wake up and then boom, it's up. Or a couple of days you see it bounce. And you're like, wow, the cycle's over. You can see this downtrend is over because maybe you go to the 4-hour cycle like this, right? You're drawing the line and you're watching it. And then one day it crosses over. You're like, okay, the cycle is over. What do? I just go in, market buy it, put my stop at the low. And then I just let the market do its thing. Maybe I caught it, maybe I didn't, but that's the risk. Because if you catch it, well, the gains are nice. And that's what we did with FAZ. That's what we did with all these. So, I mean, that's the only way to trade them. That's what we did with the UVIX, guys. That's how we got in. That's why we got in at the bottom of all those. There was no magic secret. Okay, so I think with this, it's the same idea. We know we're in a 5. It is going to come to an end soon. There's too much divergence to be erased. It would be a pump of all pumps. You would have to have the biggest pump in biotech that we've ever seen in our lifetime. And it's just such an outlier thing. Like there's no way we would see it erased to diverse. So we're in a 5. When it ends, just watch that 4-hour. When it ends, you see it. Okay, boom, market buy it, put your stop there, see if you can come out. Because it could be the end of a major cycle, right? Because the XBI is, correcting, right? This big 5 waves, right? So when this 5 is done, right, that's where lab down comes in and boom. And maybe it comes back down to about here at 80. I bet it comes back down to about 80. And then what if we break these lows, right? Could we break the low? Well, we have 5. Unlikely. The only way we break this low is it's something like this. Right? And then this would have to be a 3-wave move. This would have to be a W, X, Y. And that would be a biblical crash. I mean, that would bring you back down to, I don't even want to talk about it, but so it's unlikely. It's unlikely. But this would feel like, that's probably more probable, right? So that's how I would trade that. All right. But do what's best for you. And I can be wrong. All right, GoPro, double correct it. We had them 3 waves, and then it came up in a connector, and now it made another 3 waves. But it looks like the cycle's done when I was looking at this. See, it looks like the cycle's done, and we did erase divergence. You see that weekly cycle's turning higher. See that? And then here, you see that? And then also, you have like an inverse head and shoulders. That's kind of cool. I never really see that stuff. So I mean, it looks like it's due for a rally. So could it be like I show here? Well, we usually would just expect 3 waves, right? Remember, there's no guarantee for 4 or 5, but maybe it could come back and take the peak out. Why would it do it? I have no clue. Maybe it's gotten into other things, drones and who knows why. I don't know I don't know what they're, I'm not a fundamental, analyst for this company. I'm not sure what, rabbit they're going to pull out of their hat. Do they even make money? But I don't even know. Yeah, I guess they're bringing in money. So they're profitable. They're making something, right? Earnings is negative. They have revenue. Okay, revenue. There's your earnings. So yeah, no, they're not. They're losing money. Well, let me say this: it should rally. It should do this. If it doesn't, and we come back and break the low, for whatever reason, this little low here, then this is a little connector for this whole move, and then this chart is blown up, right? then it becomes essentially a go to zero, because you'll break the all-time low. And then this 5 waves, what it turned out to be was an A, B, C connector here. And that will be that. So I would say it has to stay above this low. It has to stay above this low. All right. So if you're buying it, that's your line in the sand right there. It's because it's already reset the cycle on the weekly. If you really look at it, it's already but we should get more upside than this, right? So it's likely to continue higher. This would be unbelievable if that's all we got. So you should get, maybe we at least get back up to 159. But if it's 5 up like this, then we should break this high. So we'll see where it goes. I guess it's got earnings, and that'd probably be a big day for it. All right, the next stock is, let's see here, FSENX. This energy play playing out exactly as we expected. So nice big pump. So now we're seeing the 4s and 5s. I know you can't see it on the chart, but if I go to the weekly cycle, because it's kind of illiquid on TradingView, so we would see more upside. Energy looks like a lot of 4s and 5s. That makes sense because we're in price transmission, right? Energy is still rising, but it's going to slow down. Margin compression, it will slow down more. Once you get to demand destruction, it's going to peak. Once you hit demand destruction phase, energy is going to correct. Okay, it doesn't mean it goes to zero, but it's going to correct the whole thing. Okay, that's demand. This is the demand destruction wave whenever it happens. So maybe it's a little sooner, but so just expect that. And then then another cycle should come out of that. So whatever that would be. Now, this is I think we should go with this for now, this view. So for me, from a technical standpoint, we want to stay above the all-time high, right? So as long as you're above 77, you don't really have a risk of a flat. So if we were to fall below 77, I would be really concerned at that point. Okay. So you'd use that as kind of your line in the sand. Now, typically a chart like this will come back and back test this at some point. And usually it's at the end of the cycle, you'll back test that. And then you rally out of that. That's typically how it goes down. But maybe you could back test it in 4 potentially too. So, but if you were to fail here and the back test fails, well, then that's a false breakout. You only have 3 waves. That's a flat. That means demand destruction is upon it. That means we skipped. We're back to COVID. That changes our correction. Right now we're going back to COVID. The COVID correction, like world lockdown, global lockdown. But I don't think it's going to happen quite like that. I think it's going to be a little different, than that. So now the other one you put in the super chat. This FSNGX is not in TradingView, so I can't chart it. So if you want a Cooper 1963, if you want something different, because you spent the money, I'll do something different. Just put it in the chat. All right, the next one is LTBR. LTBR. Lightbridge. What is going on with this one? Looks like we do not have it charted. So again, it's pretty much a go to zero. So we'll just chart it from where the cycle ended here and go from there. Looks like 5 waves up, but looks can be deceiving, as you can see. We didn't really erase divergence, and you can see there's your connector. So it's kind of like a 3-wave move from here. 1, 2, 3. 1, 2, 3. So it's kind of a deceiving look. Again, this usually fools Elliott wave people, right? Because it looks like 5, but it really actually isn't. It's 1, 2, 3, 1, 2, 3. So that's a corrective bounce. But the good thing is it came back and it took out this peak, so it double corrected higher. Now we need to kind of see where it is from here. Okay. Now that looks impulsive and then like a flat. So to me, it looks like it's going to extend higher, at least one more swing higher. And now we have to kind of figure out where did the impulse end? Probably on that peak here. So let's take a look. And then we corrected there. And then we came up in 3. Whoops, sorry, my bad. Wrong thing. Something like that. Now, typically, I don't like the B wave that long, so we're gonna look for a different way to label it. It only shows 3 waves up. It shows 5 waves up. Let's go look at the monthly. We haven't corrected the entire cycle. We are correcting this whole leg, which is what it's doing. Only in 3. Perhaps a better way to label this would be an ABC instead of a 5-wave move, but let's look. We did not divert at the bottom. So I'm just going to go with this view for now. It's not like the best looking chart, but again, Elliott wave rules. The B wave in a flat does not have maximum height, right? Even though a lot of traders love to, restrict that, but sometimes the chart, you just have to go with what the chart has. So I think something like this, and oh my bad, not like that. We want 3 waves, so something like this. I think it does something like that. But it's in this C wave that needs to finish it, and it's got more downside, right? It obviously has more downside. You did erase the vert, so maybe in the 4 wave right now. So what did these guys do? Oh, they're chemical specialty. No wonder. Yeah. Okay. Well, now it makes sense. I was like, why would this pump? Okay, it's chemical. No wonder. So yeah. So this may probably make sense. Why? What else do they do? Engages in development and commercialization of next generation nuclear fuel technology. Okay. So nuclear fuel. I think nuclear cycle will go into its next phase higher when natural gas finally breaks out more. And that I think that will help. And we also know the URA needs more downside, but a URA is going to go into a bull market, right? As URA is in a secular bull market. It's in a multi-year super cycle. It's not going to zero, right? It's correcting. Elite members know where the box is. And for URA, and this I think this may be in the URA if I remember right. I don't. It may be. So this chart makes perfect sense. It aligns with our sector forecast completely, which also means this could continue to extend. All right. I'm going to go with this view. And again, there's probably other ways to label it if I stared at it long enough, and I just don't have time to do that. All right, JTAI. Okay, so this is this kind of pump stock. Now, if gold pro is turning higher, maybe this can turn higher. So we saw that we got this low, and it came down in 3 waves. Let's take a look at what happened from an RSI standpoint. So from an RSI standpoint, again, we'll just look at each one. The 4-hour. It's still in the down. See that? It's still in a correction. Now, when you can flip this line, then we know the downtrend's over, right? So the 4-hour, and also did the daily. Now the daily is trying to build higher, so it's making a 5th wave. You see, but you're still in the downtrend, or the larger one. But you're in a final wave down, so you're in like some kind of 5th wave. But since it's Y, we need a higher time frame ratio divergence. You haven't done that yet. That does it. That's just not enough data. So what it tells me is it's going to bounce, but the bounce is going to fail. It's going to probably have a big rally. My guess is going to do something like this. Again, this is just what I think is going to happen. Either this and then it's going to fail again, or it's going to make a 3-wave move down that looks something like this, and then rally hard. And then it may not, depending on how nasty this is, will decide if this will fail soon or have more opportunity for more upside. So I think it's really tough. It looks like the 4-hour cycle's trying to turn. And if that's the case, the daily cycle's already turned on the shorter end. So all you need to do is watch that 4-hour. Where's the 45-minute? See, the 45 minutes also about to break higher. So I think it's, if I was willing, like if I was just kind of thinking about it, I'm more than likely, I think it's going to do something like this. Okay. That's what I think is going to happen. And then when that happens, it's going to go down again. But where does this go? You got to just use your imagination. And in fact, it may have already started, like I said, it may have already started moving higher. That looks like 5 waves too, right? 1, 2, 3, 4, 5. No divergence. We're on the 15-minute. So again, deceptive chart, 1, 2, 3, 1, 2, 3. So it's only corrective. It's 3. So we'll only see a corrective move here. So you need to be a little more cautious then, because then that may be that second version of that I said. Remember that the other one, the other chart I mentioned where it's this. So you be careful. So if you can break back above this level, you get the bigger pump. If not, and you break below this level, it's likely what I have here. Okay. And then it extends further down, right? It extends further down, and it's got to erase divergence and all that. It's like to me, it's like trying to catch a falling knife, but it's almost like a bearish ETF, the triple bear, right? So you got to wait till the cycle ends. And so if you really look at the 4-hour, it hasn't ended yet, and the 45-minute hasn't ended yet. So it's not time to buy it yet. You got to wait. So you just got to wait. Because you're not, like, trying to chart this doesn't make any sense. You have to just wait for the cycle to end and then get aggressive. That's how I would trade this one. And, but do what's best for you. Thanks for the big super chat, Storm. All right, let's take a look at some of these. IAG. And then Lunar. DHT. HWM. CEG. Okay. So IAG was a mess. We probably did it a long time ago. Well, it looks like the 4s and 5s, are probably playing out that we have here. Again, this is from a long time ago. So it looks like you're out of it. That's it. The end of the line. I mean, that's what it looks like to me. I'm out, right? No more labels left. Let's look at the higher time frames. You see that weekly cycle? It ended. Look at that. See you in a bear market. See that? This weekly cycle is just going to keep melting down on you. See you in bear market. This cycle is over. Let's look at the monthly. Even the monthly. See the monthly? Look at that. Oh man, look at that. So it's in bear market. It's over. So I would be really careful. Now, the stochastic is wide open. RSI is right on trend. Well, but obviously this is likely to be breached this week. Once it does, then you're going to be in a big correction, right? So that's why I was like gold and silver's kind of got some interesting charts, because a lot of the gold and silver miners show they need a 5, but there's some I track that show that their cycles are over, like this one, are over. And then this would be 3 waves down. So this would be like a connector wave. So we'll go with something like this, right? And then it would probably rally and then go down at least one more time. We usually go to the wave 4 low. So maybe go back down to $10. Let's look at the larger structure. Why did we think it was going to do this? Oh yeah, the bottom. That's why. So actually it should be an ABC. Not a WXY. Okay, so So we need that's the view. Now, could it come all the way back down here? It could, but it's unlikely. It could be a run-in flat, more likely. So something like that. That's what we think. Now, if it can come back and take out this peak, it negates that view, right? And negates the view. Then it's different. That's a different chart. All right, lunar. Lunar here. Looks like we've got an interesting setup here. We have 3 waves up, 5 waves down, and an extended 5th wave. It's kind of a strange looking chart. Let's take a look. See that kind of compression? It almost looks like a triangle here and here. So what that means is we may have the structure wrong. This structure may be something else. So we're going to take a fresh look at it. So the question is it a triangle with the structure, right? As long as we're below that peak, it's possible. And that would be something like, right, something like that. Now, that means this thing would have to collapse next week. And we only see 5, a triangle we need 3. So we only see 5 up here. So again, we'll just start labeling it and see if we can come up with the right structure here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Now this right here, I mean, we can make it 5 too. I mean, why not? I mean, we could probably do 5 here. 1, 2, 1, 2, 3, 4, 3, 4, 5. So looks like some kind of big 3-wave move. Right? Now, we haven't broken that peak. If it's going to do that, it's got to take out the divergence. So this has to come up and take out that peak and this peak. So that would imply more upside in 5, right? So I think we should expect more upside. Okay. So the view is different now on this, right? It's a different view. But like we've seen with many of these stocks, what you may get is more upside to like 2808 and then a massive rejection. Because what could happen here is you could erase divergence, finish the corrective cycle, and then make another leg lower. But we don't know that yet, right? So and then make another leg lower, right? You can do that. 1, 2, 3. However, if it can extend, then you have a 1, 2, 3, but then you can maybe make a 4, right? And a 5. And then if you make 1, 2, 3, 4, 5, then you can correct. And then of course we would buy that in a heartbeat. Because then that would open up and that would then you're going to a new bull market. So this would be the best wave to buy, which would require patience, but shorter cycle, I would expect more upside. Okay. I think you got more upside, but when we get here, it's kind of like, we don't know. We won't know yet. So then you're in, like, we just don't know. So I think you're just we'll have to ask me again, or we'll have to keep an eye on it. Okay. But if we can make 5 waves up off this low, then yeah, maybe it's a stock we'll consider in the future. All right. DHT, pushing higher as expected. And again, we would just expect this to continue its 4s and 5s. Really in no hurry to sell this thing. If I think I'm familiar with this one, if I remember, may have it mixed up with another company. Let me see. This one is. Oh yeah. So this is good. Yeah, this is good. So we want to buy the dip. Now, that's the bull. This is the most likely path again, right? The most likely path. Plenty of upside, but 4s and 5s. The unlikely path could be a flat. Or let me see here. 3 waves up. So we have 1, 2, 3, and 5. So we would need to finish this 5. So we'd have to finish it out. This all the way up here. So when we get to this 3, we may not get this 4 and 5. So it should give you more upside, right? It should give you more upside than what we've seen so far. And if it were to drop lower for some reason here, we would call it another 1-2. But it's unlikely to do that looking at the structure. Okay. So go with this count. Go with this for now. Let's look at the higher time frames and just check out what they're doing. Strong bullish momentum. Yeah, I mean, looks like the daily cycle pulled back on that 4. You can see the daily cycles in a new uptrend right here. So as long as the daily cycle continues higher, it should make these 5s, but see, it's going to create divergences now. It's unlikely to take that out, so it's going to start to make the 4s and 5s. Slowing down. It's going to slow down. HWM. Helmet Aerospace. All right, let's take a look. Probably some kind of 1, 2 flat, and then we can go from there. So that's a lot of bearish divergence there. A lot. And there's your cycle low. Still in the same uptrend all the way up. You haven't corrected this leg yet. You're still in 3, but it looks like it's going to come to an end. And it looks like, let's go to the monthly. I think that we just breached it. See, it's wide open to the downside. So it's probably started wave 4. So I bet more likely that 3 is probably just, wave 4 is probably just started. Okay. We normally look for a 618 retrace for wave 4s. That's typically what we see, especially on these large cycles. And that'll get you down to 169.25. So that's probably where it's going. And it will take time to get there, of course, and it will be 3 waves typically. And it looks like it's just starting that process now. If it's aerospace, what we do know is defense aerospace is also in super cycle 4s, these high degree 4s. We track these sector ETFs as elite members, and we have wave 4s and all. We have these 4s now. So it aligns with that forecast. This could be a shallow connector, and I believe the ETF we use is M1-2 we're looking at. And so if it is the case, there's a potential area here for a box. Right? What was the level I said it could get to? I just totally forgot it. Yeah, 117 right in the box. It's right there. There you go. So that's probably likely place. Now that would be that'd be like a crash correction. If we don't get it, if you don't get it in this box, then it could do a lot of things, right? It could, just trying to look at the structure here. So could be like A, right? And then, so it can do a lot of things, or it's, finish like that, so one or the other. It's like a race divergence there. So tricky structure is probably in a flat connector. It's probably a flat connector here. Let's see. Yeah. So yeah, maybe it's got more upside in the connector wave. Again, it's really like, this is the worst case view I'm showing you. Like it could be in a flat, so that would mean it would come up a little higher, and that would raise the target. All right. So you just have to decide, do what's best for you on it. But most of this sector, from what I can see, is in in this discount. Something like this. And again, I'm thinking it goes a little higher, because normally you'll make some divergence. It's got to have an impulsive move, and it looks like it's missing it. So it's probably going to do something like this. That's what I'm thinking. And that would raise, again, that would raise your target. Not, it would be different than what I'm showing. And then if it does, then it could bounce and go lower. All right. This is the worst case view. You see here, there's just a little bit of bearish divergence. So this, if I really wanted to label it, I could say run in flat and call it done. So it's better to just leave it on labeled and wait, because you got the lower low, right? It's a lower low. So it's likely to resolve lower. All right. And then CEG constellation. What's this one up to? All right. This is our constellation. We're looking for 5, a flat. We know we typically see the wave 5 lost. We could come back all the way back down to 159. That would mean this is probably a 1-2-1-2. I'm not showing that. So just, I would be careful in it. That's a pretty big bounce. You see that? I wonder if we've got to make an adjustment to our count, and that would allow us to get. We're going to have to make an adjustment to this. This is going to be an ended diagonal. Let's see here, because it's moving in 3 waves. So that gets you down. See, it's moving in 3 waves. So it's going to move in 3 waves and finish out. So this could be anything. So we can even still be in 2. It's unlikely. It's unlikely it's finished, the whole thing. If it could come back and take out B, then we would have to label it finished. But it's unlikely. Utilities in general could be at the peak of the grand supercycle. XLU may be at the grand supercycle peak. It has not made its intentions known. The count is done. I don't have it. I label it fully complete. All 5 waves is done from the beginning of the ETF's existence. And now we need to see, is it going to extend or collapse? And it has not shown its cards. But you could think if natural gas is going to go higher and moon, their costs go up, and maybe they can't even get the fuel they need to run their, you just start to think about utilities. People go on unemployment. Can they pay their utility bills? And so maybe there's a crisis. Maybe utilities isn't such a safe haven that we think, right? Or maybe there's something else. We don't know why utilities would collapse, but that's unfortunately what a lot of these charts are we're seeing show. However, the sector ETF does not show that yet. So perhaps there's hope. It's done. I don't think it is, though, for all those reasons I said. And it's only in 3 waves, and it can't end in 3 waves. You need to end in this 5-wave sequence. So there's a lot of reasons why. So that's the way I have it labeled. Okay. So good luck if you're in it. It's highly likely it's coming down here. Highly likely. Okay. Where are we on the larger cycle? We don't have a lot of data, I guess, to go with, but that doesn't look good, right? It's enough to draw a trend line. So basically on the left side of this line, bad things are happening. Once you flip it, good things will happen. I know it's so simplistic, but that's, it's the truth, guys. So and again, people hate that because it's too simple. And you don't need a lot of fancy charts in there. As long as you're on the left side of this line, bad things. But once you cross over, then we should go into a new cycle higher. Okay? So that's simple. Okay, then Marvell and Zillow. Marvell and Zillow. Marvell, we kept pushing for more upside, and that looks like is what's happening. So you can see the chart kind of in front of your eyes there. It looks good to me. Looks like it's about to extend. Perhaps this is what the market makers, stocks like this, are getting used to try to pump the SMH. I'm sure it's in the SMH, right? Because they know mechanically if they can squeeze the SMH, by default, they squeeze, AMD and NVIDIA. And that's what keeps the headline indices pumping. And that is the mechanism that has to be played to keep the stock market from falling. So Marvell looks like that is going to be pumped next week for some reason. I mean, that's what this chart shows. And don't know why, but that's what it shows. So Marvell will be beneficial to the pump, to this pump. It may be Monday, like a little big gap up Monday. How's the after hours doing? See, it's already green. Yeah, see, this is a clue right there. Look at this. So this is gonna have to play out, right? But once it finishes again 3, then anything can happen. I show 4s and 5s, but once you make this 3, we've seen it many times before. You can pull back, and then does that. So just know that can happen to you because I think you're below the all-time high, right? As long as you're under the all-time high. But even above it, it could still be a flat, but it's more likely if it's below the all-time high. So, but yeah, that's what it looks like is happening. Okay, that's what it looks like is happening. Do you see what the market makers do? Like we have a buy. Look, they run the stop, you buy it again, and then they run the stop again. See, they don't want you to win, right? You don't want you to win. They don't want you to win. But you could have fought them, right? Once you saw the cycle end, you could have just market bought it. And that's the games you have to play, right? And then this is a higher high. So that implied we knew we would break out eventually. All right. Let's go to the next one. I'm just kind of looking through the comments here. Raj for 199. Not sure if you had a question or not, but FCX. Let's go to FCX. FCX. I was just looking at that today and looking for a 5th wave. I'm showing here, but let's step back and look at the bigger structure. This is one I've posted on X and pretty much was been ignored. And I was mocked even, but look at it now. I mean, it's crazy how, and again, I love to vent on this because there's people that will post charts just like I posted this inverse head and shoulders. I projected a breakout of a 20-year pattern. I told people to buy it way down in here. I was mocked, made fun of on X. No repost, no one follows it. Maybe only like a few hundred people saw. And then yet people post the same thing and get tens of thousands of views. And a lot of times doesn't even work. So it's like kind of a head scratcher. And that's why I think the algorithm is shadow bound. But that's again, another, because I tell people information they don't want out. Because they really want you to lose in the end. They don't want you to make money in the end. So this is the chart right now that we have. And we're breaking out. We'll make a 5. Once we make this 5, we could make a 4 and 5. A 4 and 5 here. Now, if we don't make that, it could correct in another 1, 2, which is what I'm thinking could happen. And this could like nosedive back down. But it would be like a 1, 2, 1, 2. Okay. So you're going to have to prepare for that possibility. Now, there is a bearish alternative view you need to also prepare for. If we break 5078, we only have 3 up. And you need to prepare for this. A, B, C, and a flat in 2, like that. And of course, unfortunately, there's even a more bearish view. I get rid of this, and I go A, B, C, and we go into this, and then we're still in 2. This would be epic demand destruction. This is demand destruction like COVID style, guys, if that happens. Or we're in World War III. So I don't like I said, I'm not a fortune teller. I'm showing you 3 possible paths. So you just need to prepare for each one. But if we can take this high out, that I think negates those bearish paths. Okay. If you don't, well, then you got to be careful still. Okay. So you just got to understand that. So that's an important level that's got to hold right there. Okay. It's got to hold that level. All right. So that's what I have on this one. So let's go back to my chart. Okay. So we're looking for something like this right now. All right. And we'll see where it goes. We'll see what it wants to do. It's up to copper. Okay, it's up to copper. And copper is the AI. Copper is a like reflection of how the AI hardware like sector is doing. And if it's copper's going higher, that means they're doing okay still, right? People are buying it, prepared for more production, all that. If it goes lower, then there's demand destruction. There's actually something's gone wrong, and you just don't know the news yet. So copper is important, and so we see this, still. This should be again, and then when you look at this chart, guys, this should be in a bull market for decades, right? This should be a bull market. Like if we can go in a time machine, I bet this will flip the market caps of some of the big cap tech. This will be a future big cap tech like market cap. Like this is going to be a big player in the future. That's what this is saying. Resources, materials, builders, that's the future. Okay. Not software really anymore, right? Hardware, robots, building shit. That's what I've been telling my elite members that since November 2nd. That's not something I just invented. I told everybody, all my members, to prepare for this transition. And we've already seen it play out, right? We're seeing industrials lead more, hardware lead. We're seeing the Teradynes pump more. We're already seeing that transition. But when we correct or crash or whatever happens next, those stocks are going to be the first ones, the V bottom, the ones that do all that, not software, not the small tech stocks that have no earning. Like those aren't going to make it. They're not going to do that well off those lows. Though they had their time. It's going to be it's going to be an era of making things, manufacturing, production coming back to the United States, energy production, physical goods. That's what it's going to be like. War economy, potentially, making bombs and missiles, and that's what it's going to be like. Won't be making, it's not going to be making Salesforce.com software plays, right? It's not going to be doing yes. And I keep telling my members, yes, on the crash, those could be at generational lows. It just may take 10 years to come out of those lows. But a stock like FCX or probably V bottom, right? Once we make the bear market low, this will probably be a V bottom stock, right? Right away back to all-time highs. But like a CRM, will languish in a basin phase for like this did, right? Like essentially this thing did, right? If I could, I'm willing to bet, in 2045, this is what CRM will probably be like in a like lingering around, and then at some point, probably be resurrected like this is. But right now, this is the era. This guy's era. It's the builders, materials. This is the sectors. So just make sure you guys have those on your shopping list. If we crash, okay, you have to be aware of that. Do not just buy the sound house. Do not just buy these small stocks. Okay, you've got to buy these builders, these energy plays, the Exxon Mobils, that type of thing when they sell it, because that's the real bull market coming. That's the real buy and hold investor bull market where you can just buy them and go put them in your 401k and just hold them. And then wrote, so that big sell-off, again, assuming we'll get it in the market, that's your opportunity to load up on those kind of stocks. Okay. Maybe they pay dividends too, even better. Okay. And of course, I'll have to say, not financial advice. Do what's best for you. All right. JTA pump it overnight. Oh, trading. Okay. So looks like the cycles are over. So you can go with that more bullish path I mentioned. GoPro. I don't know. Someone said GoPro was going to start making drones now and shit like that or something. I don't know. There's rumors. I mean, there's a lot of rumors, like I said, the thing about pumping a stock is they'll pump a dream. And they'll promote a dream that may never come true. They may have, but they're trying to pump their stock. So just the chart is the chart. We don't know why it could go up. GoPro could go up, but it's showing it could go up. I don't know why. Who knows why? Stock promoters may be ready to promote it. I don't know. But you need to be prepared for that. I'm just telling you, be prepared. Okay. Oh, Zillow. I missed Zillow. Let me go back and do the Zillow. Zillow crash correction. Problem with Zillow is the XHB. So it's got to hold 2565. It's sure you would think it would do that. The XHB is not that. It's not that far from a box. I mean, you can see it looks like we're still in the primary downtrend, right? So we're still in this sea lake flat, but it looks like you see you're in this like fifth wave. So you're in like a fifth wave. So it looks like it's should be coming to an end soon. Now, why would this happen? Let's take a look. It looks like as of now, A, B, C. Now, we can always erase divergence. We know that it can extend and not do what I'm about to show you, but we'll just trade each chart on its own. Let me go back. See how we're moving in this thing. It's moving in a three-way. Yeah, it may be finished. It may already be finished. Let's go to the shorter cycle. Yeah, I mean it's the 4-hour. See, it's showing all that bullish divergence. It's already showing the 4-hour cycle has ended, but the daily hasn't. That's what's the most important cycle in this correction. See that candle like that? It's only needed to move in 3 waves. I mean, it may be finished there. We don't know. Now, what does finished mean? Yes, that could be the major low, or it could just form another connector wave. So I'm on the bet it's probably finished. So it's probably going to bounce here. Now, if it's a connector wave, it's only going to make it back up to like the wave 4 peak, maybe fill this gap there, and then it would melt down, collapse. Okay, I can't rule that out. Okay, it can't be ruled out. And then we break this low because the larger structure has not come close to the all-time high. It's unlikely because we have this higher high here for that to happen. So I think we just go with this chart for now. Okay. I would like more data to convincingly say it's over. I think it's done, but we don't have enough data on the daily to say for sure. So, maybe it can go a little lower, but this was the general area we expected anyway, right? This is where we kind of thought it would end. We also see Home Depot very close to a box as well. So I'm not sure if Trump has something up his sleeve to help, people with buying homes or something. Like, I don't know what this, again, we don't know the news, but for some reason, Home Depot is right near a box and this looks like it's coming to an end. The XHB looks like it's got a little more room to go, right? It's not near its box, right? See, now if the XHB was down here, I would say, yeah, it looks like home builders, that sector's turning. So I don't know. I guess we'll just leave it the way it is. Well, maybe some news is going to drop. Where's their earnings? May 6th. Yeah, I can't speculate. I don't know enough about what they do as I know what they do, but I don't know like their business model completely. They gotta, pull a rabbit out of their hat or something. So maybe they'll pull a rabbit out of their hat here, even with higher interest rates. That seemed to be, to me, that would be the fundamental reason not to buy it, but perhaps they're overcoming it. All right, so that's Zillow. Okay, the next one is Baba of, let's see, Futu, Baba, and then APLD. All right, let's take a look at these guys. Looks like Futu is playing out as expected. Probably something like that. Let's take a look at that. Yeah. 1, 2s. A, B. Yeah, we just have to label it like that. Now, that looks like 5 waves down, but too much overlap. So this is likely to continue to extend lower. So here it's got a couple possible paths. The first path, the most obvious one is this, and then made another like 5 waves down. And then it's just making another 1 and 2, and then it's about to like melt down. So there's this path, but the other one, see how you have no divergence. Let's go to the shorter cycle. Here there's a lot. So I think I would favor that first one I showed. I was going to show maybe we're still in 2, right? Maybe we were still going to do something like this and pump again and then drop. But I don't think that's as likely. I think I would expect a 1, 2, 1, 2. So if that's the case, it should start to turn lower and head down. BABA, we expect more downside, especially with the Hang Seng forecast. So it looks like from here, 5 waves down. So it looks like we're in some kind of ABC correction. Clearly, you're still in the down leg of C. So now we need to just kind of find out where we are. So I think we had this as a 1, 2, 3 at one point. Yeah. And now that's like a connector wave. So let me go back and look at the structure properly. So we have a little divergence here. We're calling it 5 waves down. None up, and a little bit here. So probably put the A there, come back up like that. 1, 2, 3, 4. See, and then you don't really see 5 waves anymore. So we're probably going to change this around. And then Y. And then this is just a connector in Y. Now it makes a little more sense. So this was just a 3-wave connector here. Now I got to go down on the wave. So we would expect this to continue lower, but there's not enough data to properly label it because we could even still be in X. It's not likely. But I think what I'll do is we could label it like that. And then it's about to drop nosedive. And then like we could put the X here. And then this could just nosedive from there. And this could become like an A, B, C, and nosedive. The other is it's still in this X. And this may match the Hang Seng forecast a little better, where we pump a little bit more and then drop. So ultimately, bottom line, I'm looking for $94. That's the target. The wave 4 low. Okay, that's where we're targeting. Okay, and that's where I would be looking for it. Okay, somewhere down where you retrace this 5, somewhere down in this area. Okay, that's where I would be looking for it. Apply digital. But what's interesting here is we never made a 5th wave up. So now we need to ask ourselves, are we still in wave 4? And this is a higher degree correction. So let's just double check and see. So this wave 2 took almost 2 years? June 23 to April 24. So almost a year. So yeah, it's probably still 4 waves. So it's probably still in this 4 wave in a flat. Right? It's gonna take a year. So it's probably in a flat. So which means we have to finish impulse, and we already did. So you already, unfortunately, see, we finished one down here, and then it failed already. 1, 2, 3, 4, 5. 1, 2, and see, you only have 3 down with a lower low. So this is not good. Oh, you know what? You see how we double corrected? Look at that. We double corrected there. So it's probably, we just think about this for a minute. You know, maybe I'll take that back. Maybe we did make the 5, and we'll just have to look at it from a different point of view, because I was looking at this as like 1, 2, 3, 4, 5, but maybe, and again, I'll look at it a little closer. Maybe we have 1, 2, 3, 4, 5 like that. And then this would make sense. And then we just had a double correction here. And this would make a lot more sense. And it's finished. And then you're back to the 4. So that makes a lot more sense. But the problem is the subdivisions in this 3-wave. I want to just make sure that at least passes like common sense. Yeah, I think it could, because you have a higher peak. So yeah, maybe we could label this as 5. It just had a huge wave 1, which kind of hid its structure from us. Yeah, that's what it did. See, it kind of hid the structure. So when we zoom in on it like that, now it makes sense. So I think that's what it is. So the interesting thing about this is, since it came back and erased divergence, this was a stop loss rate. We see this a lot with very bullish instruments, where you don't fully extend, and it was just a stop loss rate. So I would just trade it bullish above 2013. We've seen this way too many times, because what happens after that, the market makers just take it higher, and people are waiting and it doesn't come back. It was just a stop loss rate. So I would just assume that it's done its correction from here. I've learned over the year, to start being more aggressive, because we're seeing the market makers do this more and more. The stop loss raid, and then pump it. And you're like, wait, it should have fell further off of a connector. But the clue is, you see this erase like that, this divergence. They can't hide that because it's such a shakeout. So when you see that, that typically means it was the final shakeout. They were just running, they dropped it so hard to run the stops, and then now they'll mark it up. So that's how I would look at this for now. So I think you have a bigger rally, and then we'll see where it goes. Now, I could always do a lot of things after that, but that's what I'd be looking for. And we only see 3 waves, so it could be a 1, 2, 1, 2, or this, and we extend. So it can do a lot of things. Yeah, it's what is Applied Digital? It's like data set. So it's AI hardware. AI hardware. Okay. Yeah, AI hardware is doing okay. So maybe something like this. Now I guess there's another, obviously there's another alternative count. It could, like I said, they could rally this still, and then bring it back down again. So just keep an eye on that. Okay. TMV. So the bond market has been very sideways. It's been very tricky. But our view on the bond market is still, this is our view to the pink box. So TMV would go down, right? So this is our view. It was really tricky here, but the view is playing out. So we expect 20-year to head to 5732. And what I think will happen there is then a collapse, right? Maybe that's your demand destruction phase. This is price transmission, inflation happening, margin compression, and then this is your demand destruction, your COVID-like phase. So I think, and this is where you want to probably maybe own TMV, is what I'm thinking. Not like here, it's just kind of gambling. Like but you look, you're in the middle area. It's been sideways for a couple years now. So it's really no, like I can't recommend buying or selling that right now. I would I would want to buy TMV in this box. So it would require, it's still requiring a lot of patience. So we can look at it now and see what that chart looks like. Let's take a look at what we have going on here. So I think we were playing around with this the other day here. So if TMV, let's take a look at what we've got. And this chart isn't up to date because, like I said, I was going back and forth on where rates were going before this war. So I didn't like it looked like it was going to go lower. We didn't know it was in some middle. See, I still had it resolving lower like I have here. So perhaps, again, I keep going back and forth. And I know because, again, this is the middle area. Just notoriously for being inaccurate. So this is one of the hardest structures to try to label. But maybe we're going back to this view, right? And then this is where you want to buy it. And again, this would mirror up. This would be kind of a flip of where we were before, right? Let's see if I can do this. Just kind of looking at it. So like a triangle. Yeah. I have to do something like that. Let's look at the RSI and see if it gives us any clue. I mean, you'd have to do something like that. So let's look at the RSI and see. So we see on the weekly cycle, it's crossed over. It's about to turn down. So this is a weekly cycle correction about to take place. So that means it's about to fall. See, the weekly cycle's pumped and it's failing right now. The monthly cycle also is about to cross back over again. Okay, this is the sideways view. You see, it never got to oversold, right? See, it's been boxed in. Once this breaks out of this, that would be a big move, right? So but that we're no much. So the weekly's rolled over. The daily, let's take a look at the daily. Now the RSI has turned lower. Ending the cycle, no matter how you draw the trend line. So again, as long as you're on this side of the trend line, bad things are happening lower. So I think looking at the daily and the weekly, it looks like to me, you can kind of talk yourself into, more downsides coming. And then when you look at our interest rate forecast, which would likely continue higher considering the market should be inflationary, right? And rates should go higher. So that's all I can say on it. I think to negate the view, one of the first signs is if the 20-year could come back and take out 4.856. But even then, we could just be in B. So really, to negate the view, you have to come back and take out 4.538. But by then, it's probably too late to trade it. But if you were to take that out, then this box is in play that I have down here, 3.6, which I think eventually gets hit no matter what. And that's why I think you're going to do this, and then this, and then the sovereign debt crisis comes later. Something like that. Because if this doesn't happen and we just go like this, then surely the markets are going to crap, right? But this will be hyperinflation. Who knows? So I think that's what I'm looking for. Okay, and rates, but it's very tough forecast given the sideways nature of the market. It's not trending really, even though it looks like it is. It's not really trending. So that's why it's not really been traded by any of our groups. and I don't really talk about it too much. But one day, like energy, like the miners, it will break out of this mess and we'll be able to trade it. It will eventually break out or break down and we'll have a trade, right? Because at the end of the day, if it comes up here, we can buy bonds or short, lower rates, buy bonds. If it comes down here, right, we can short bond. But in this area, I really just want to avoid it. Just trade. I would rather trade a clearer structure and not be tempted to fall into the trap, right? Because look, it's gone nowhere. Nowhere. This has been a big money trap for people. All right. So when rates go up, TMV goes up. I thought TMV is the bull fund. Is TMV the bull fund or the bear fund? Did I get it wrong? If I did, bear fund. My bad. I got it wrong. So yeah, I should have, I must be asleep. Sorry guys, you're right. Yeah, TMV is the bear fund. So you're right. So go back to the original chart I had. So that was what I had. See if I can bring it back to what I had before. But yeah, no, it's, you're right. Yeah. So the bear fund goes higher. So I would expect that to go higher. And I think I had that original chart. If I can go back to it for you. Because that's what I had. I just didn't look at it close enough. I must be like dyslexic or something. Yeah, there we go. There it is. Okay. So there you go. That's the idea. All right. So again, from a structure standpoint, it's very similar to where we are now, right? 1, 2, and we'll see it go out. And then again, I guess it crashes when rates fall, right? So that's what we're looking for, something like this. All right. But I do view it going higher or rates going higher because of what I just said. So this is the primary view, right? Sorry about that mix up. Yep. Sorry about that mix up. Yeah, I must have misread it or something. I try to sometimes do these off of memory. But I have, like I said, I don't trade the TMF, TMV too much. All right. I think I got through everyone's comments. If I didn't, put it in the chat, please, before I get off. So it looks like the markets are green after hours. Again, many people are very hopeful. They're very optimistic. They believe Trump, what he's saying. They believe it'll be a peace treaty. But just remember, time is the ally of Iran. Delay. So escalation, de-escalation, escalation for Iran is what they want because it allows the infection to metastasize in the patient, right? And kill the patient. They know it's price transmission right now. They're just going to give Trump happy talk, Kushner happy talk, because they don't want their country below the smithereens, right? So they're going to they'll do enough to keep the bombs from falling like that, and then let the infection spread through the economy because they know that's the weapon. And again, I hope Trump and them are smart enough that that's what they're doing. So again, eventually we have to come to this climatic moment to get to the new normal, right? Because the longer you drag it on, you're just going to drag this, slow bleed, and eventually we come to the same point: demand destruction and markets crash. Eventually, just delays it, makes it more painful. But I believe that, and then allows, again, Iran to be making money on a toll, and they're going to rebuild and all this, and they can sneak weapons in. Someone said they're trying to sneak weapons in from North Korea and stuff. So like the longer it goes on, time is Iran's ally. So they would love to delay and happy talk Trump. And the markets will just eat into that because they think everything is going to go back to the way it was, but it's not. And just for the reasons I said, the old status quo is over. There is no going back. But it's people hate change, especially from a globalist, standpoint, Wall Street standpoint. the never Trumper, all those, they want to go back. They want it to be like it was forever. Outsource every job. Everybody plays nice. NATO, the EU, they want all that. They love that shit. World government, they want all that. But none of that is going to happen. It's going to be now regionalized, resource grab, countries kind of fighting for that. And it's the world, AI is changing things, and it's the playing board is being turned upside down. And they're not going back. There is no more of this globalization that, it's all about resiliency now in supply chains, not efficiency. So things are different. And the market, the people, they just have their heads in the sand. They're just not seeing that bigger picture. So that's what's going on, guys. And eventually, though, when they get hit in the face with either a massive earnings miss or a semiconductor plant can't operate or something, that until that happens, there's going to be this happy sideways choppy movement in the market that could go on for weeks and weeks. But we know, like I said, there's this infection spreading that's killing the patient right now every day, right? The Strait of Hormuz is not flowing, okay? Not flowing. Looks like we got that's a good boost there, 16. Look at that. So that's probably the most I've ever seen it since I've been tracking it. So that's good but still, it's way off its normal, right? So it's not flowing like it should, and that's going to keep things and be problematic. Also, it takes 4 to 5 weeks to get the ships where they need to go as well. So there's a lag. So there's problems that are infecting the economy. So just keep that in mind if you're out there. Okay, so just know that that's what's going on. So the Iran will want to run the clock out on Trump. That's their best strategy for them to do, and then they're hoping he comes begging to open this straight up, and then they'll say, okay, here's our terms. And then they're thinking Trump will just give in at that point. But the financial markets will be in free fall. That's probably what I think Iran's trying to do, but they don't want their country blown up. So they're going to try to, I think, give Trump some happy talk so his deadline can pass. Okay? That's what I think is going to happen. So he doesn't blow him up based on his deadline, which he won't anyway. He's never going to, I just don't see him going scorched earth. And if he were to do it, then that was the plan all along. And he had no intention. He was always planning to just destroy that area. And then that means he's trying to go to the end game right away. All right. So I think we'll leave it at that, guys. So good night or good morning, depending on where you live. And we have an interesting day tomorrow for sure, but probably more interesting Tuesday, right? Because I think that's his deadline.